This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. Welcome back. So what we're going to do today is talk about what not to do. All right. I want to explain why on a chart like Amazon right now, why I would not be shorting it, even though there's two consecutive patterns on two consecutive time frames, weekly setting up a specific MACD signal, daily setting up actually a combo MACD signal, and I would not take the trade. All right. And I want to explain why. And you have to understand this if you want to really improve your win rate. All right. This is all about improving your odds over time, not necessarily this one single trade. It's possible that Amazon will get killed right now. All right. But I'm trying to get you thinking in terms of odds. Once you get the odds in your favor, you will be a lot less hesitant to take trades, and you will continue to put on high quality setups. All right. That's what we're trying to do, is look for high quality setups, increase your win rate, and avoid these trades that look like low lying fruit. They look like really easy trades until you start to look at all the multiple, understanding multiple time frames. Once you do, then I think you give you much more strict guidelines about which trades you can take and which trades you cannot. All right. Now, if you want to learn more about some of these techniques, I would suggest starting with the book. You can go to rabilstockresearch.com/book for more information. Also, if you enjoy this content, please hit that like button and also subscribe. Okay, so I've got my grid of Amazon up. I've got a monthly in the bottom left, weekly bottom right, daily in the upper right, and then an hourly in the upper left. All right, now when we look at the chart, so the first thing I like to do is just take a quick glance and see if there's any setups or trends that are pretty glaring. Okay. The first thing that I would see when I look at this is this pattern that has developed on the with the price action and the trend line break and the rally back to the 18 and the pinch play, right, with even red DI starting to show up here. All right. And then I see the gap down that developed, and the fact that we gapped and then we've struggled to get back up through this this key 180 level. Okay, so we've made a move up and we've kind of consolidated here. Now, while that's taken place, you notice we made a lower high here and we made a higher high here. Okay, now we had a lot of strength to the downside, and then we've consolidated, no real sign of buyers here. All right, so when I look at this and this, I'm kind of thinking I've got a trade on my hands. I've got the potential for a setup. But why is it that I would not do this trade? Okay, I want you guys start to think this way. Now, when I do we do a monthly webinar for my subscribers, I go through and do a question and answer period like this, where I'm asking them, and it's interactive. They're answering questions and everything. So you have to look at this chart and be able to understand why you wouldn't want to take this trade on a weekly, daily setup. Okay, now what I would do also is I always look up, right? I mean, you got to look up. So if I'm looking at a weekly chart and I'm saying I've got a little pinch play here, now there is a problem with the pinch, and that is that it's developing just above the zero line. Now there's enough room here. You can see the way we have some room to get down to that level. That's a decent amount if you're using daily risk to be able to play it, okay? But the bigger problem I've got, and even before I look at the monthly chart, look at the ADX. So the ADX is showing a lot of strength to the upside. It did show divergence at the peak here. Okay, so we have the potential for this to show some kind of a reversal. All right, but when I look at the monthly chart, I don't really want to play this playing against. So this is a pinch play to the upside on the monthly, and it's showing good momentum to the upside. So if I'm trying to play a chart off the weekly, daily, I don't want to fight the upper time frame, all right, which is the monthly. All right, I don't want to fight it. It doesn't have to look good. It doesn't have to be an agreement. Like, it doesn't have to be a setup, but I don't want to fight a big spike low. You can see the bar that made a spike low right at the 18. That's sort of telling me the midpoint of this bar is probably going to provide some support. Now, there is only one way that I'd be willing to take this trade, and that is if we get this set up on the hourly. Now, if we got a little hitch and it made a lower high right below the 18 and turned down, now I've turned this trade into this trade. And I'm using this time frame to determine how much room I have. Well, I know I probably only have room to like down here. Let's just see how much room that actually is. Let's just call it 160, maybe even, low 160s, something like that. So if I'm doing this trade, I'm thinking I got room down to about let's say be conservative and let's say I only got room to about 163. Well, if I can do this trade with hourly risk, put the trade on and play it for a little move down into support, now I'm not messing with the monthly chart. You see what I mean? Like I don't want to mess with this. That's why I don't want to do this trade with this time frame. So these two time frames, to me, I'm playing with the fire a little bit because I don't have enough time to get in and out. All right. Now, I do recognize the fact that it's a pretty attractive setup when you look at this ADX that failed at a new high. We're sort of thinking that this is going to reverse. All right. But I'm trying to tell you how I eliminate losers. All right. Look, you can find winners, but sometimes you have to go through 3 or 4 losers to get a winner. I don't really want to do that. I'm willing to go through one loser to get a winner and have like a 50% win rate. Okay. Prefer it to be higher than that, but at a minimum, at a minimum, I want it to be around 50%. I don't really want to be down in that 25 to 30%. And I've done videos on the reason why, and it is mental. It's streaks. If you're going to play that game where you make really good money 25% of the time, and if you did that and you put on a trade like this and you were able to mentally handle the losing streaks that you'd go through, being right 1 out of 3 or 1 out of 4 times, and great, you can keep trading that way. I know for me that if I have losses of 6 or 7 times in a row, which is what's going to happen if you are, if your win rate is only like 30, 35%, you got to plan on being wrong 7, 8 times in a row. And go and do your calculator, your streak calculator, to figure that out. But I'm trying to avoid that mentality. I don't really want to go through periods like that where I have to fight my mental stresses. I like to take wins. I like to mix in wins. And that's the whole reason why the way I've structured the course is going to help you mentally make it through periods where maybe the market's a little bit more difficult, but you're sneaking in some wins here and there. All right. And that's going to keep you on the path to success because you're not going to go jumping and looking for a different strategy. That's the goal here. We want to stick with the strategy and make sure that we're not saying, oh, this strategy doesn't work. Let me go buy a different book. Let me go find a different guy. Let me see if I can learn something new. And then maybe take what I've learned from Joe and then go to someone else. And now it's like you've gotten decent at hitting a golf ball because you're working with one pro, but you hit too many balls out of bounds. So then you go find a different pro. Now he's telling you a whole different set of things to look at or think about. And then from that point on, your golf swing goes down the tubes and so does your golf game. I'm trying to teach you this from a stock standpoint. Don't get into that situation where you're trying to hop around and look for perfection. It's just not going to happen. So put the odds in your favor. And the way to do that is to make sure you're not fighting the upper time frame. So if I'm doing a trade off the daily and the hourly, I want to make sure I'm not fighting the weekly, right? If I have a weekly that's showing a big spike low and a lot of support based on the 18-month, I don't really want to play a daily hourly into that. So it's got to be something that you take into account. So don't get too focused on just the signals themselves. All right. We've got 2 signals. We got a pinch play here and a 0 line reversal and reverse divergence developing on these 2 time frames. Is it possible this trade is going to be a winner? Yeah, it's possible to ignore the hourly and just go flying down through that. I mean, maybe it'll work. Okay. But I don't want odds that are 35% or lower. All right. I really want higher odds than that. And the way I go about doing it is avoiding trades like this. Now, like I said, this might be the one time where it actually works. I'm not really concerned about that. I'm trying to put trades on that I think have a probability of being right at a minimum of 50%. And really, I want it to be higher. Now, if you do trades, a lot of the recommendations I give to my institutions, I've been told over the years, is 70 to 80%. But when you're trading, you're not going to be 70, 80% unless you don't use a stop, right? If you don't use a stop, then yeah, it's possible that you could have a very, very high win rate. But you're going to take massive, massive losses. And I think, the times you're wrong, you have the potential to take massive, massive losses. And we want to avoid that. So it's a fine line that you have to kind of straddle here. You got to make sure you're minimizing your risk when you're wrong. But you have to also try and eliminate trades that don't offer the same probabilities as the others. And the way I do that is going into that upper time frame. All right. Let me know if you have any questions. Thanks.